Everybody, it's Garrett Nell with Bring Home Denver, your local real estate experts. Today we are sitting down with Troy Vigil with EA Buck Tax and Accounting Services, and we're just going to have a quick conversation about what advantages there are to owning homes, what to think about when you're selling a home, and also what it looks like for buyers when you're purchasing a home. So, Troy, thanks for sitting down with me today. I really appreciate it.
Thanks for having me. Glad to help.
Yeah, absolutely. And Troy, just so you know, has been our bookkeeping, accountant, tax advisor for almost 10 years now. We've sent numerous clients over to him. He has been just a wealth of information and help as we've navigated multiple properties, building a business, and growing some wealth. So he has agreed to speak with any of our clients and be a resource to us when you're buying or selling and as you move through this tax season.
Yep.
So Troy, I just wanted to talk to you a little bit about, I know a lot of folks are out there thinking about selling their homes and they're concerned about capital gains. They're concerned about what the tax implications are. Can you talk that through a little bit with us?
Yeah, you bet. So one of the most advantageous tax rules in the code is excluding the gain on a primary residence if you meet certain criteria. If you're single, up to $250,000, and if you're married, up to $500,000. And really, it comes down to it's got to be your primary residence for at least 2 out of the last 5 years. There are definitely some wrenches that can be thrown in that, like if it's been a rental property or if it was inherited, or there's a lot of other things that impact it. But the key takeaway for our audience today should be that if you're single and you've lived in your house for at least 2 years, there's a good chance that you won't pay tax on the first $250,000 of the gain. And if you're married, you wouldn't pay tax on the first $500,000 of the gain. And like you said, in this market and in this region of the country, we've had so many clients take advantage. It's called Section 121 exclusion because you're excluding the capital gain. We've had so many clients take advantage of that the last few years, thinking that they were going to owe tax on that appreciation or that gain that they're pocketing, when in reality, the government doesn't tax you on that if it's your primary residence.
Absolutely. That's great, because I know a lot of people are looking to capture all this equity that they've built up over the last couple of years in their home and put that into the next home. And the common question I hear from people is, do I need to do a 1031 tax exchange to access that money? And they don't, correct?
Correct. And I get that question here a lot too. And just for our audience to know the difference, a 1031 exchange is when you're selling or trading business property, so rental property that you're collecting rent on. That's when you would utilize a 1031 exchange if you didn't want to pay the taxes on it. Section 121 exclusion, what I was talking about, is for a primary residence, and you don't have to replace the property. You can sell it and take the proceeds and go to Las Vegas if you wanted to, but which some people probably do.
Maybe not the wisest, but yeah, it's up to you.
Right.
Awesome, that's great. Can you tell me a little bit more about some of the tax advantages of just owning a home outright? Or not outright, but owning a home?
Yeah, so when you purchase a home, especially in the first few years, you're making mortgage payments to a bank, and most of those mortgage payments are interest in the first few years of the loan. The interest on those payments is all tax deductible. So that's the biggest benefit. The property taxes are also tax deductible. There's certain points involved in the loan that are deductible, and that's true both when you purchase the home and if you refinance, so you can deduct some of those points. And then the appreciation, obviously the tax-free appreciation. So when I think about it conceptually, the 4 benefits of home ownership on the tax side are the mortgage interest deduction, the property tax deduction, points if you had to pay them being deductible, and then that tax-free appreciation as long as you stay in the house for 2 years.
Great. Those are all some pretty big wealth building tips, right?
It adds up quick, especially in a market like we've seen over the last 10 years since we've been working together. It seems like it has only gone up. And so that appreciation not being taxable is huge. And then getting a tax benefit to be able to write off the mortgage interest and the property taxes, that's secondary, but it's also every dollar counts.
Yeah, absolutely, especially in this market.
Right.
So are there any other underutilized or pretty important tax tips that you feel like people just miss out on when it comes to home ownership, buying or selling?
I would say the biggest one is not being aware of the dates that are needed to qualify for that exclusion. You do have to be in your home for at least 2 years unless you meet what the IRS considers a life-changing event. So if you're not in the home for a full 2 years, you don't get to exclude the 250 or the 500,000. So I've seen that cost clients a lot of money. You know, even just because they weren't aware of the date, they'll sell after a year and 9 months or 10 months just because they weren't advised and they didn't know about it.
Right.
And then they owe tax on that money. So not knowing important dates, not knowing how 1031 exchanges work if you have real estate that's investment real estate. So we had a client, he had this property out in California, and he called me and he said, I sold my rental property in California. I'm doing a 1031 exchange. I already sold the property. I'm gonna reach out and find a 1031 exchange expert now. And I said, you skipped step 1 and went straight to step 2. So he owed tax on that money. For our audience that doesn't understand that, if you're gonna do a 1031 exchange, you've got to sign up with a 1031 exchange intermediary before you sell the first property. They hold on to the proceeds until you buy the second property, and then you don't pay any tax on that sale. You're just deferring it into the second property. So I would say the things that I've seen cost people the most money is just not being aware of dates, rules, how to execute things. Most of these things that I'm telling you about, even if it's a non-client, if they called in and asked, we give them this information over the phone. We'll say, here's how this works, here's what you got to be aware of. We tell people when you're buying and selling real estate, it's good to have an advisor on your side preparing the tax returns and filling out the forms, but it's common knowledge that that's cost people the most money.
Absolutely.
In my opinion.
Yeah, no, that makes sense. So now that we're heading into tax season, obviously there's a ton of forms that clients need to be getting their tax preparers. What should our homeowners and people who have purchased or sold in the last year be looking for specifically to send over?
Great question. So anytime you buy or sell a property, you're getting a closing disclosure. Those are important, and you want to hang on to them because the closing disclosure gives us as the tax preparer all the important information: when it was purchased or sold, what the purchase or sales price was, what the points, and there's always pro rata property taxes and insurance and things like that that impact the taxes, and that's the only place to get it for. So in my opinion, in order, the most important documents are the closing disclosure, and that's true on a purchase or sale and on a refinance. The 1098 from the mortgage company, and if you have homeowners out there that don't escrow their property taxes and their insurance, the property tax bill. We have a lot of clients that are financially savvy enough to know and budget to just write the property tax bill payment once a year. They use that money throughout the year on their own. They save enough to make the property tax payment, but we got to remember to deduct it if the mortgage company is not handling it and if it's not being reported on that 1098.
Great, that is really good information. And if you're a Bring Home Denver client, you'll know that every year we send those tax documents to you. If you've purchased or sold with us, look for those in the mail shortly.
I wished all the realtors that we worked with were on top of it like you guys are, because the clients you've sent us, they have the information that they need.
Yeah.
A lot of them have to go digging for it.
Right, right. That makes sense. What else should we know about as far as the tax code this year with real estate? Any changes? Anything else that you think is going to be important for our clients to know?
So the thing that was a little scary to me about a year and a half ago was they were considering doing away with the Section 121 exclusion. And I think the National Association of Realtors and a lot of other home buyer advocacy groups went to bat and said this would be a nightmare if you did this. So as of right now, there have not been any changes to the exclusion for selling your primary residence or to the 1031 exchange rules. I'm sure you guys hear just as much as I do that they're constantly trying to do away with the 1031 exchange because they incorrectly, in my opinion, feel that it favors the wealthy. We have a lot of blue-collar workers who have saved enough to buy rental properties that have also spent money on tax planning to know that they're going to do a 1031 exchange into the next bigger rental property, and they're just going to continue to defer those taxes and exchange into new bigger properties until they die, and then their beneficiaries or their kids will get that stepped up cost basis. That's how the rules work right now, and that's what the government is trying to do away with or take away. So as of right this second, no rule changes for anything real estate related in 2021 or 2022.
Okay.
That could change retroactively, and we follow it really closely in our office because it impacts almost every single client we have. Even the ones that are renting, they're thinking about buying, it'll have an impact on them.
Okay. So if I'm hearing you correctly, you're saying that if someone's on the fence this year of selling and either participating in a 1031 exchange or even taking care of the, what is it, Rule 21?
Section 121.
Section 121. If they're doing either of those, it might be beneficial to do that sooner than later because changes could be coming.
Exactly. I think at some point in time, unfortunately, both of those will potentially be on the chopping block and done away with. I don't know if it's going to be this year, next year, in 5 years. I have real estate of my own, both my primary residence and 4 rental properties, so I watch it as close as anyone. But all the appreciation that we've seen and the limited supply of homes on the market have made me want to sell my properties. I recently moved up into a new primary residence and was going to keep my old primary residence as a rental property, but between the Section 121 exclusion and the crazy offers that we were getting on the property, offers that were coming in $100,000 over what the list price was,
Right.
me and my wife made the decision just to sell that property. So we liquidated that first property, didn't pay any tax on it, used that money to invest in other things. It's hard to really call the top of a market,
Right.
but I know if I had a lot of real estate, this would probably be the time to potentially sell some of it and diversify into other assets or diversify into other regions. This market is just unlike anything I've ever seen before. And I'm pretty young, but I study the history of real estate, and it's just it's hard to believe we're in the situation that we're in. So
Absolutely.
the short answer is yes, it is probably a good time if you're on the fence with property that could go one way or another. Would be a good time to sell.
Yeah, that's great advice. Took the same advice last year and we sold our old primary, and frankly I know a lot of people who are just moving into cash right now, thinking that there may be a change in the market the next couple of years and freeing that up or putting it into a more midterm equity position.
Yeah, there's a lot of uses for that money right now, and I'm not a investment advisor, but we're happy with the decision we made to sell.
Yeah,
for sure.
Absolutely. Well, if you guys have any questions following up this conversation, feel free to reach out to Troy here. As always, your real estate experts here at Bring Home Denver. We'd love to talk to you about any of these topics. And continue to tune in. We appreciate it.
Yep. Thanks for having me here today. And like you mentioned, I would, even if you're not a client of ours, I would much rather walk you through the process, answer questions for you to make sure you're doing things correctly. So if you do have questions, feel free to email or call, and we'll help you as best we can to make sure you understand what you're doing.
This is why we love working with Troy. He's great. Thanks everybody.
Thanks, Garrett.